What's up everyone, welcome back to my channel. I'm Jay. I'm back with another brand new video. Today's video is about catching spikes in boom and crash. Before 2 months I've been sharing some videos about catching spikes in boom and crash, and also trading the trend in boom and crash. So this will be very easy and accurate way of catching spikes in some conditions. Of course, you gotta know that there is no holy grail system in YouTube or everywhere which catches every spikes. So this video will be more accurate than the others. So before we dive right into the video, I'm going to show you our free Telegram channel. We have more than 1k members. We share signals and analysis every day, and we share ideas also. We have right now a Black Friday sale where 50% is off on the VIP membership. If you want to join the VIP, 50% is off till November 27. So you can use this advantage. Now let's dive right into the video. So as I said, this strategy is very easy and accurate. We are going to use moving average. The first step is going to the indicators list and adding moving average and RSI to our window. So let's add RSI first. RSI means relative strength index. Here we have RSI. Set the period to 14 or 13, so I prefer 14. Apply to close. Choose any color that you prefer. I choose yellow. And go to levels. Don't forget the levels. We should have two levels, 30 and 70. 30 levels mean oversold and the 70 means overbought. So set these levels and click done. So now we have RSI on our window. As you can see, the bottom line, this is RSI. So as RSI goes up to the 70 level like this, above this level, the market is oversold, overbought. That means there will be a brief small correction on the market. That means spike or crash. And in opposite direction, if market goes down to the 30 level like this, the level here bottom, so that's called oversold region. So when the market is oversold, there will be a little bit correction in the market. That means spikes will come on boom 1000 or boom 500. I will explain that later. Now let's go to the indicators list and add moving average. The moving average should be in main chart, not indicators window. So on the main chart, that means this one. Click F plus, go to the indicators list and add moving average. So the moving average is it takes the data from the date or the period that we choose. For this case, we choose 200 moving average. Since we are going to use 200 moving average and 10 moving average, let's set our period to 200. That means the moving average will take data from 200 days and will give us average value. Then shift should be 0, method should be exponential, apply to close, and style or color, anything as you prefer. Then levels should be empty, click done. So our moving average is also set. Then again, go back and add another moving average, same steps, but this time we are going to add only 10 moving average. The same case, but the date should be 10 or the period should be 10. This means the average will be only for 10 days, and method should be only simple. Then color, change the color, click done. So finally we have our chart like this. We have 10 moving average here, the blue one, and the orange one 200 moving average, and the RSI here, the yellow one. Finally our chart is set. Now let's go to the strategy. How are we going to catch spikes? First, let's go to boom 1000. I'll show you how to catch spikes in boom 1000. The first step is always watch the RSI. watch the RSI. If RSI is below 30 level, that means the market is oversold in boom 1000. That means there will be spikes soon. But as soon as RSI goes to 30, it doesn't mean that there will be spike. They might not be spikes. So we have to go to outer zoom level. Just zoom out a little bit and check the trend. You should always check the trend. If you want to buy on boom 1000 or boom 500, the market should be going up, right? Yeah, because when market is in uptrend in boom, there will be many spikes. So what you have to do, like, check the moving average. Here, if you see, the market is this one, right? Then we have moving average here, the orange one. The orange one is 200 moving average, right? So the price is above this 200 moving average. That means the market is on uptrend. Market is going upward on boom 1000. So this is opportunity for us. If market is on uptrend in boom 1000, that means there will be many spikes. So we can take advantage, right? So the first step is check the market. If the market is above the moving average or 200 moving average, you are safe to go. So we can now go to step 2. The first step is checking the market. If it's in uptrend, we checked it, it's on uptrend for boom 1000 because the market is above 200 moving average. The next step is confirm if that is uptrend. Sometimes market goes above the 200 moving average and reverses back. That means like a false breakout. So we have to confirm our breakout or our trend. So here we have the first breakout, right? The market was below moving average here, but it broke above moving average and it's right now here, right? So the market came back to the moving average, and what it did, it tested back. Let's see this point. You see this area? It was near 200 moving average and we got 2 spikes. So that's confirmation for the uptrend. First, the market broke above 200 moving average here on this area, right? So it came back again to the moving average and tested back or got rejected. That means if the market gets rejected from 200 moving average, we are safe to go. Now we can go to the next step. So what we do next, wait for the market to come back to 200 moving average again, right? So first we got breakout here, second confirmation here. What we do next, we wait for the market to come back to the moving average. Then we check the RSI if it's oversold. Then if RSI is oversold, we buy, right? So let's see. Yeah, as I told you, the market came back to this point, to the moving average, right? So it was near the moving average, but the market gets near to moving average doesn't mean we are safe to go, right? We have to check the RSI. So now let's get to RSI. If you see the RSI which is straight to that area, RSI will be at this point, right? So RSI is oversold. That's like way below 30 level. It's around, I think, 5 maybe. So that means RSI is oversold. The market is near moving average. What does it mean? It means you can safely buy. So we buy at this point when the RSI is oversold and when the market is near the moving average. So how many spikes we got? 3 spikes we got. If you want to hold also, there will be another 2 spikes. That will be totally 5 spikes. Again, after taking this profit, you can also wait for the market again to come back to the moving average, right? So right now the market is coming back to the moving average. It's way too far from moving average. Let's see. Here we have moving average, right? 200 moving average, and the market is right now here. So wait for the market to come back here. If it gets near to the moving average, go to the RSI. If RSI is oversold, you're safe to buy. Buy, and always remember to put stop loss. Always you have to use a stop loss. This is a easy and accurate way to trade or to catch spikes in boom 1000, you can use these same steps on boom 500 because they are almost same, because they go in the same direction. Now let's go to crash 1000. All the steps we talked about boom 1000, they work on crash 1000 but in opposite direction. Since crash 1000 goes up and the spikes are downward, we have to apply the same thing but in opposite direction. What we said, market should be above the moving average for boom 1000, right? So for crash 1000, if we want to trade the spike, market should be below the moving average. If you see here, the market is above the moving average. That means we are not safe. The market is not safe to catch spikes. So wait for the market till it gets back to the or below the moving average. Let's check another area where the market was below the moving average. So if you see this area here, the market is below moving average, right? Look at this area, it's perfect. So this is the market, it's going down and we have moving average here above the prices. That means it's safe area to trade crash 1000, like to sell, and we can follow the other steps. So let's zoom in and let's see. Let's go to the first breakout, right? So the first breakout is here. The market was above the moving average here. Then it decided to break the moving average. Then what we are going to do, we have to wait for the market to come back to moving average and test it. So as we said, it came back and tested the moving average, got rejected. So finally we can safely trade. We can safely trade the market when it comes back to the moving average again. So as I said, the market came back to that area, you see. So the market came back to that area. Okay, as I said, the market came back to the moving average and got rejected. In fact, it tried to pass the moving average a little bit but got rejected. We got two spikes. Voila, that's a profit. So you take the profit, you get out of the market. Or if you want to wait, if you have enough amount of money on your balance, you can also wait. So this is a profit. Next, you can wait for the market again to get rejected. You see, the market again came back to the moving average. Here it came back to the moving average and got rejected. How many spikes? 3 spikes. That's about, like, you can measure the points. If we measure the points here, how much will it be? That's about $61 on 0.5 lot size. $61. You see, 1 2 3 4 spikes only. So you wait for the market to come back to the moving average, you take advantage. So after these spikes, you see, after these 4 consecutive spikes, what you need to do is in fact don't forget checking the RSI. Okay, I think I forgot talking about it. First, check for the market to come back to the moving average. When it comes back to the moving average, go to the RSI. If RSI is near 70 or above 70 like this, you can safely sell. So let's see another. Yeah, actually many spikes came. You see, there are about, like, from here to here. That's many spikes. If you want to hold, that's good opportunity. So after these spikes, wait for the market to come back to the moving average. So here you can see market was very near to the moving average, right? Only few points remaining. So at that point, go to the RSI. Check RSI. If RSI is above 70, as you see, it's above 70, right? So the market is also near moving average. Sell here. Sell at this point. Put your stop loss above the moving average according to your balance. Then wait for spikes. Boom. One gap with 2 spikes came. This is how many points? Let's measure from here to here. Again, $50 on 0.5 lot size. So again, wait for the market to come back to moving average, right? So it came back to the moving average. So we sell here, right? So we sell here. There is small spike, very, very small, but we're not gonna take that profit, right? Because it's very small. So we will wait. Yeah, boom, another big spike came, this one. In fact, the market broke the moving average a little bit, but another big spike came, so that's profit. You take the profit, you get out. Again, the market went back to the moving average, but unfortunately this one will be lost because you'll be using stop loss, so it will touch the stop loss and you will be out of the market. So this is how you trade. Next time I'll be sharing price action videos. Join our Telegram channel, it's free. If you want to join the VIP, you can also join. So see you next week.